Welcome back to this channel. This is Potence Up. In this video, I'm going to be showing you this real quick analysis that can make you ton and tons of funds from the market. Stay tuned. I'll be right back.
Become a Profitable Trader Academy.
All right, welcome back. So real quick, I'm just going to be analyzing this particular chart, and you're going to see real quick what I'm going to be doing here. So first off, I have to locate my demand zone at this level, which will also be my order block, as you can see right here. So I've mapped that out. The next thing is to locate all of the imbalances in this market, as you can see right here, and in this very one is the FVG. So I'm just going to do that real quick. Then let's also see what happened here. Okay, talking about some liquidities, as you can see right here, this is actually one of the points for the liquidity level, and also this one. Okay, as you can see right here, just pretty much real quick, mind you, if you're joining us for the first time, do well to hit the subscribe button and turn on the notification bell so you would be notified whenever it is we drop a new video like this, as you're seeing, to become a profitable trader. All right, so the next thing we're actually going to still look at for being able to identify our liquidity levels. The next one we're going to be doing is let's also look at our breakout structure, which is right there, as you can see right there. So I'm waiting for price to hit or take through, or get through to the order block, and then from there we'll be having initiating our trade. But now this particular price action is quite tricky. Now see what happens here. When I analyze trades like this, I usually crave your indulgence to pay close attention to all of this, because when we analyze trade, we don't just use the normal analysis. What we also deploy all the necessary market structure and all of that for us to be able to give you the best analysis in that particular market. And that's what I'm doing now. As you can see, this is the movement of the market. You can see it's moving. You're having lower highs, lower lows, higher and so on, higher highs and higher lows, and so on and so forth. So from these, if you watch closely, you see that price had to hit through our demand zone. Yes, exactly the zone where we had to place where our order block gave us the origin of that particular breakout structure. So this is what we're having here. Now, if you should take your trade here, you see that yes, you're still going to make profit. But if you're a long-term term trader, then I think in most of the cases you have to really understand the flow of the market, so you don't end up having issues, or you will not be become you as in the market won't flush you out. These are things you need to pay attention to. Now, if you watch closely before the pullback from here, you can see an engulfing candle. Now, an engulfing pattern as it is, and that pattern would actually tell you that there's going to be a downward movement. There's going to be a strong downward movement that's going to break through that particular key point. So from this point, that was what brought about that downward to be able to retest that fair value gap, as you can see right there. And then there's actually a push up. If actually you want to take your trade at this point, it's good. But like I always advise everyone, if you're the type that take schedule for a long position, then you should have a good amount of dollars in your account. You should have a good this is not a $10 account trade. This is not a $100 account trade. You should have a good amount of that, because the market, you could see what is happening right in the market. It might you were on profit, or actually it placed you on profit, and all of a sudden it is actually tending towards your stop loss. In this kind of case, because of how where your stop loss is going to be placed, it might not hit your stop loss in at the point. If you're a risk manager, if you apply your proper risk management, you might not hit your stop loss, but then you must have lost some money. So that is why most of the case we advise, when it's actually a big accounts that can do all of this. So once you get this done, you'll be able to be profitable in the market. Now, this is what happened. And now remember, the market has a pattern. There's a pattern. This market is moving. So all you need to do is to, in as much as you're waiting for price to hit your order block, you should also look at the pattern at which it is displaying. At what pattern is the market forming? Those are things you pay attention to. So most of the time, you might not necessarily wait for price to get through to your order block, but if you understand patterns, you know that okay, yes, this is now a particular pattern. When you have this could you could see how it is now. And when prices are like this, so you're having higher highs, higher lows, higher highs, higher lows, you should be prepared for, um, a retracement, and that retracement will not bring about um, that particular pattern that's going to break through the initial key zone, and from there you can know that yes, there's a change of character at that point, and then if you stake your trade, it becomes a pure and a big downward movement for you. You can imagine how much you're going to pack in. So this is for traders. Almost of the times, your total dependency are on other blocks. Most of the times it fails. That's just how the market is. A very unpredicted, unfixed market. Are we together now? So you just need to keep your predictions um, and your risk management alive. That is how you scale up in this market. So that's going to be it for this. If you're tuning in, don't forget to hit the subscribe button, turn on the notification bell, and be notified whenever it is we drop a new video. I'll see you in the next one.